All right, baby. All right, baby. You know what time it is. Boom! Indoor sunglasses engaged. Hello and what is going on, lovely people of the internet? It is Hootmoney here with another BBIG update for you guys today. It was a pretty iffy day on the charts, but when you really break it down, today was an absolutely amazing day because what I saw, you know what? I don't want to spoil the surprise for you. So we're going to jump into this video. If you guys want to check out Hootmoney trade alerts, we absolutely bagged the F up on ATER. I'll show you guys my entries on the screen. We got it on Friday, sold it today for a 50% gain on the shares alone. I used margin too, so I got a little bit more than that. It was a juicy day overall. We had some people 10x on call options at open as well. So if you want to get the ATERs before they pop off, Hootmoney trade alerts. First link in the description. Anyways, my friends, that's about it for that. Let's get right into the video. Drop a like. All right, my friends. So here we're going to tell you guys what not to do. You have the April 8th contracts. Sure, you could pop off, but you're more likely to lose a ton of money. These are down 66%, 46%. They're down. All right. These are traps. These are traps. So let's just say you bought the $3 call option this morning at open, right? You thought BBIG was going to run, you know, it was pumping at pre-market, whatever. All right. So here's the chart of that call option. It started at a nice hot 30 cents per contract. And then all it really did was, you know, go down throughout the day. And it's just kind of just angled down, wedging down throughout the day, down to 22 cents. You would have lost about 33% of your money. If you just bought BBIG stock, you would have actually gained on the day. So understand these weekly call options, they're pretty unintelligent, and we see tons of them on BBIG. Out of the money right here, $3.5 strike price, 9,000 open interest, 18,000 of volume today on these contracts alone. It's just pretty sad. I hate to see it, especially when you've got the Giga Chad Gamma ramp of April 14th absolutely juiced up, and you see the volume on these April 14th are so much lower. The highest volume was the $5 strike price with 4,000 in volume. You look at the April 8th, 18,000 there at the 3.5. Guys, stop being idiots. All right, stop it. Just stop. Seriously, I'm not trying to offend anyone, but these are not intelligent plays, and it's not going to help anything in the end. You're not an ape if you're buying those weekly call options. Maybe if you YOLO your entire bank account on it, I'll give you some credit, but I just don't like them. I don't like them overall. Moving into market Cipher right here, as you guys can see, 2-week chart, we did get that green dot. I like to start with these longer time frames because they're good. It's good to look at a more macro perspective. This thing's been beaten up for so long. You can get a macro shift in these types of companies, right? And that's why you have to look at the 2-week chart. Even if April 14th doesn't necessarily play out, we have plenty of room to keep moving up. And as you guys can see, the last green means go dot was all the way in January of 2021, and there was lots and lots of volatility, but eventually it ended up seeing a peak up here of almost $13 per share, and it was pretty much in an uptrend from that point. As you guys can see, there was tons of volatility. You can still trade it, but it was in an uptrend. So we got the same thing right now, 2-week green dot. Let's take advantage of it. Let's make this more than just a 414 Gamma squeeze, especially since we have Tyde coming and we have the merger with Zash coming. Those two things are coming, right? In the future. It doesn't have to come this week, although if it came this week, that would be absolutely amazing. But it can come. Understand that. It will come. It will come. It's going to come. Anyways, we have the daily chart right here. Daily chart does show some apparent downside risk with that second red dot and the momentum wave pointing down, but at the same time we're seeing the VWAP right here flatten out, and its potential next move on that VWAP could come right back up. So this could remain overbought longer than you can remain solvent. Moving into the 4-hour chart right here, we have a very decent setup, and this is what I was showing people all weekend, especially in the Hootmoney trade alerts group. Boom, we bounced perfectly off of this fib level. The fib levels that we're using is the top of the January run up to the bottom of the March decline right there. And we got a perfect fib level bounce right here. This coincides with the level of the Wyckoff accumulation pattern of support. And we boom. So we're still kind of in a Wyckoff pattern. It's not following it perfectly. I'm going to look at these fib levels for now and just use that as just my guide. I'll use the fib levels. So for price targets of what we can do, the next fib level up would be 398 right there. So that's the next level to watch out for. Definitely mark that on your chart. And then if we break out of that, we go to 445, which would be very, very fantastic. Moving into the hourly chart right here, as you guys can see, momentum is on the upside, up and up throughout the day. Definitely a choppy day overall. If we're just looking at market Cipher, it wasn't really given any good signals. It was a red dot, then a green dot, then a red dot, then a green dot. This is how you know this is a manipulated stock, because it's not really following normal price action whatsoever. The downturn right here, this negative momentum wave, again, this is not normal price action. It's absolutely insane, which is why those weekly calls are super speculative, because this price action is being set up to absolutely drain you out of your money on those weekly calls, which is why I hate them. Eventually, one of them will hit, right? You buy a weekly call down here, you sell it up here, boom, you hit like crazy. But understand the risks involved and understand that they're set up to not help you. All right, that's what you got to understand here. Moving into the 15-minute chart, you'll see it again. It's a little bit easier here on the 15-minute chart, but there's just loads and loads of volatility. We only finished up 1% today. But if we're just looking at all the swings here, pre-market, we spike up 3%, right? And then we dip right back down 2%. Let's just look at what happened at open, right? We move up. We move up 4%, right? Then we move back down. We move back down another 5%. So you can obviously clearly make money off of this volatility. But they're using this volatility and closing it at 1% up on the day to make people lose money on weekly call options. It's plain and simple. If you're in a stock where weekly call options see the significant sum of volume, they're obviously going to be manipulating this thing to get you guys to lose money. It's very, very easy. You're also seeing a nice little bounce off of the spider lines. We pointed this out the other day where we got a bounce right there off of the spider lines. Same thing happened multiple different times. So these spider lines are not BS. It's bounced off of it 5 times, as you guys can see. So overall, I think the most likely scenario that would play out is this 4-hour chart, and we can move up from here. I definitely expect a nice little FOMO spike up at a random point this week in BBIG's share price, probably back to the 340, 350 range. They'll probably do the same thing, but there's also that chance that we could get a January-like run-up, as it's only 2 weeks until expiration. So they might not do the same thing where they pump it up, right, and rug it right back down. It might be the final push where they can pump it up and seriously pump this thing up, right? We have 2 weeks till expiration. At this point, it is crunch time, all right? I don't think they're going to give up this $3 level or $2.91 level, so there's not too much downside risk at this point. At this point, daily VWAP also curving back up. I think we're set to rip. I think we're really good to go. I'd like to quickly thank the sponsor of today's video, which is Moomoo, a licensed FINRA broker that does absolutely zero payment for order flow. They're running a promotion where you deposit $1 on their platform using the links below. You get 2 free lotto tickets on Hootmoney. Hear me out. You deposit $1, as you see right here. You get 2 free stocks valued up to $3,500 each. That $1 could potentially get you an Amazon stock, Apple stock, Google stock, Tesla stock. You name it, you can get it right here on Moomoo. All you got to do is use those links below and deposit $1 on their platform to do it. It's an amazing platform, no payment for order flow. Check it out using the second link in the description or first link in the pinned comment section. With that being said, let's get right back into the video. All right, so here we have the Ortex data for Vinco Ventures. It's still looking extremely juicy. Not much has changed. We're still on the threshold list, still at 100% utilization. Cost to borrow borrow did go down slightly to 124% right there. That is due to the price going down. Typically, as the price goes down, the margin requirement decreases, which in result makes the cost of borrow a bit cheaper. It's still super expensive. 124% cost to borrow is very, very expensive. But overall, not much here has changed. So we can move on to Fintel. Fintel's got it at 18 on their short squeeze leaderboard. Again, once you're in that top 2, top 3 of the short squeeze leaderboard, it means that the stock has already run a lot. So 18 is perfect. And with a 95 short squeeze score, that definitely does imply we have some upside. 5 hours ago, they did say 200,000 shares were available to be shorted. Not too much at all. They also have the borrow rate coming down slightly back to 107 right there on Fintel. Short volume ratio was back up as of Friday. As you guys can see, 55%. That was absolutely insane after coming down from under 50. Anything over 30%, just to put it in perspective here, is very, very high short volume, and seeing a consistent over 50% every single day in BBIG is just absolutely ridiculous. And then here we have the March failure to delivers. Nothing too significant in this regards. I mean, there are a decent amount of failure to delivers, and they're worth about 1 million in value, but it's not anything close to what we've seen other points. The March failure to delivers are overall not too significant. Moving into the unusual whales flow, this is the juice. The juice is loose. I really like the flow today, and I'll explain to you guys why right now. This is what I was hinting at the beginning of the video. So we're looking at unusual whales, $10,000 in premium or more, ask side only, calls and puts. No bid side, so no selling of these options. What we saw here today, we saw 2 very, very large bets. So the 2 biggest bets of the day actually did come in around 10 a.m. So the beginning of 10 a.m. I'm going to filter out all the other bets besides these 2. $45,000 worth of premium for the $4 call expiring May 20th, 2022. And then $24,000 worth of premium going to the $2.5 call expiring October 2022. Now, what's important about this flow is that we did not see super crazy FOMOs. When BBIG has made moves over the past month or so, a lot of it was due to FOMO. So we saw a very heavy options flow here. We saw a very heavy options flow here, both of which came after a very large move in the price. What we saw today is not a huge move. We got a nice little bounce, obviously, from Friday, but we're not seeing a crazy move. If anything, we saw consolidation, and these were fired around $3 per share, which is not the lowest of this channel, but it's not the highest. It's definitely not a FOMO bet. We saw something similar back here in January. So if we scroll back, boom, right here, we saw a very, very large bet. And then afterwards, the stock price absolutely took off. This was for about $100,000 worth of premium. And again, it wasn't a FOMO. It came in at a very weird time, a consolidating price action, right? But what came afterwards was absolutely insane. So the call options, again, to summarize it, we weren't seeing any crazy FOMOs come in. Sure, there were some 4-8 contracts right across the board. We saw some 4-8 contracts. It is what it is. Those are FOMOs. But the big premiums, the 45,000, the 24,000, long dated expiration, they're over a month out each, and they're just not FOMOs. That's why I like it. That's why I like it, and it is definitely showing me similarities to what we saw on January 12th, I believe, back here before BBIG started absolutely ripping. Moving into historical call option volume, it also wasn't very high as of today. We had 71,000, very similar to the volume that we saw on Friday, and Friday was also 0 data expiration. So these are the times where you want to be buying when this thing is low. We saw it similar volume before this really took off back on 314 just a few weeks ago. Similar low volume. It's not a shiny object. And what came after 314? What came after 314, right? low call option volume, and an absolute explosion in price action. So we're back to that point where there's more potential for some upside. You want to see something even juicier? Look at this implied volatility chart. It's pointing down. It's right here at about 150%, down from 175% where it was trending at average just the other day, maybe slightly below there at 160%. Regardless, this is a pretty low price point, right? And we've seen, and it's lower implied volatility than even like the January run up. So because implied volatility has dipped off and it's become so low, it's made options a lot cheaper, which could be why we're seeing a big buildup in it could be why we're seeing this option being bought right now. It's because it's cheaper, it's less of a FOMO, and potentially if you're an insider and you know this thing is going to run and have a violent gamma squeeze, this would probably be a decent time to be loading up, right? You wouldn't have gotten a time like this since, again, the beginning of March. It's only been this low since the beginning of March. So none of this run up, none of what you're seeing right here has had this low implied volatility besides for what we're seeing today. Now, unfortunately, I'm going to have to break some bad news to you guys, and that's the max pain, because it did hit the max pain on Friday. If we go back to the chart, you guys can see that on Friday at close, we expired at around 3.01, which would put us at 3. If we're looking at the max pain for 4-1, it was 3 on the dot. So pretty much all call options from that week and put options for the most part, most of them expired worthless, right? And at a $3 max pain, you want it to expire at 3 on the dot. So it's a small win expiring at 3:01 after hours, but it's not really a huge crazy win because those options can only be exercised for 1 penny or $1 worth of profit. So it's not crazy. I mean, you want it to be in the money by a decent amount so that there's actually a liability from the call option seller. We've got the same thing here for 4.8. The max pain is going to be $3 per share. It doesn't have to end up at $3 per share on Friday. On the dot, right? It doesn't have to do that, but what we've been seeing is these max pains being hit week after week, so be careful. This is why weekly options, again, super dangerous. But with all that being said, I also wouldn't be surprised if they don't let that max pain hit this week, and they send it this week, and they do the actual gamma squeeze this week. And again, that's because of what happened in January. This was a week before options expiration. They're going to want to have at least some wiggle room for them to be able to manipulate this and get a bunch of people out of it before it actually expires on April 14th. So you really got to think about what the market makers are going to do right now to induce the most amount of FOMO into the stock as possible and then potentially rug pull it before. We already saw that earnings were delayed 15 days from March 31st, which coincides with that April 14th expiration. If BBIG management is in bed with market makers, if they're good friends with each other, if they're good friends with Hudson Bay, if they're doing anything shady, right? They're going to release bad earnings that week to potentially move the price down out of the money. So what I'm thinking is that maybe we get Cryptide or something this week to induce the FOMO in the first place. We'll see what happens. Nobody knows the future. A lot of that was speculation. We still have this absolute insane Giga Chad gamma ramp with all this gamma exposure. Everything's good with that. We still have 2 weeks, 9 days until April 14th. Anything could happen. This is crunch time, ladies and gentlemen. Fasten your seatbelts. Buckle up. Elon Musk. We're going to the moon, baby. SpaceX, baby. We're taking this rocket. We got first class seats. We're going to kill all the little Timmies that go short. We're going to kill all the little FUD spreader Timmies. They're right directly in our path. Boom. We're going to blast right through them. It's going to be an amazing week. I hope you guys enjoyed today's video. Drop a like on it if you guys did. Subscribe to the channel if y'all are new. Check out Moomoo if you want up to $7,000 in free stock as long as you deposit $1 on their platform. That's the second link in the description, first link in pinned comment section. And the first link in the description, you can find Hootmoney trade alerts where we find the juicy plays such as ATER where we hit a 50% bagger today. Don't want to miss ATER? Join Hootmoney trade alerts. First link below. Anyways, my friends, that's about it. I'll be seeing you guys tomorrow. Peace.